Hi everyone, Joe Gentili from Left Tail Risk Advisors. So this video is geared towards people that have created special needs trusts for their children and have life insurance in that special needs trust to fund it. And the question is that life insurance policy still on track? Um, to be frank, the purpose of this video is to make some people uncomfortable. And I think that is a good thing in this context because a lot of people have a special needs trust. Purpose of that special needs trust is to create a fund to take care of their kid when they pass away. And it's a very important role that this trust and this life insurance policy is playing. And for a lot of people that have these trusts, they bought a policy from a life insurance agent. They have trustees in place to oversee everything, and they feel like everything is taken care of on that front. And I'm telling you that that may not be true. And this is the reason why. The reason why is because the majority of trustees of special needs trusts are not life insurance experts, and they don't really understand the different types of life insurance policies that exist and the different risks involved with each type. So, for instance, most people will fund a special needs trust with permanent life insurance and they think they have whole life insurance. That's going to be true in some cases. Some people are going to have whole life insurance, and those policies are considered the lowest risk types of policies because they're pretty simple to administer. You don't need to know a lot about life insurance to keep that policy in force. All you have to do is pay the premium and the policy stays in force. But a lot of people think they have whole life insurance when in fact they have universal life insurance or index universal life insurance or one of the many varieties of universal life insurance. And one of the things that makes universal life insurance distinct is they have flexible premiums. And what that means is that sounds like a positive description, and in some ways it is, but there's a downside to that. The downside to that is that the premiums are not guaranteed. That means that the premiums that you're instructed to pay on your illustration or the target premium that you were given, if you pay that amount every year, that doesn't guarantee that the policy is going to stay in force, right? So if you have a trustee that doesn't really understand life insurance, they may just be paying the premiums and thinking that everything is okay. And you may be thinking that everything is okay with that policy. But the reality is that premium amount that you're paying is based off a set of assumptions that the life insurance company and the agent created to create what they suggest you pay in premium. And if those assumptions turned out to be rosy, that they created an illustration where the policy was getting credited a rate that it's not getting credited, then you may be under accumulating cash value to keep that policy in force for life. So the takeaway is this. The takeaway is that it's very important to A, understand the type of life insurance policy that you have. And once you understand that, especially if it's a universal life insurance type policy, to have that policy reviewed every year by a life insurance professional to make sure that there's enough premium going into that policy to keep it in force for life. Because the last thing that you want to happen is to have a special needs trust and you are depending on that money to take care of your child, but the policy has been underfunded for life, and you find out late in the game that that's the case, and the policy may not be there when you need it. So you want to make sure that that policy is adequately funded and that's being reviewed by a life insurance professional. The trustees that you have may or may not be life insurance professionals or well versed in life insurance. If they are not, it's very important that you speak to them and insist that they have these policies reviewed every year because the role that this policy plays in your life is too important to just leave unattended or leave to chance. The good news is that if the policy is being underfunded and you catch it early or early enough at least, you have options to fix that, right? That's not a fatal problem. The problem really occurs when you catch it very late in the game, when the problems are obvious, when the company is asking for significantly more premium. that's when it gets really difficult to fix the problem. And so don't assume just because you have a trustee that the trustee understands all these issues about life insurance. So either select trustees that are well-versed in life insurance, or if they're not, that's perfectly fine. But make sure that they're consulting with somebody to get that policy reviewed. Any questions on this topic, please feel free to reach out, and I encourage you to like and subscribe for future videos on this. Thanks.